What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So the Browns did win, and that was surprising. So I'm going to have a beer before I go to bed to celebrate that victory. Probably have a, I don't know, I'll figure out what I'm going to drink to celebrate that victory. That was a surprise. What else is a surprise is Target stock. Now, I have said this numerous times. I will sell a dividend stock if something drastically happens or something drastically changes my mind. I will tell you that straightforward. I don't give financial advice. I mean, I change my mind all the time, and I have more time to reevaluate certain decisions I made. So the thing is, with Target, they're going through some issues. Woke, theft, earnings per share is not going really well. They have a lot of issues. So I let a few things slide with them when I bought them. I got a decent amount of dividends. It appears that there is some safety with them. But the biggest concern with me, I'm going to go over that. And this is why I pulled the trigger. I really think what they're doing, I had a little bit of research. Time to finally research on some of my dividend stocks and see if I need to reevaluate, change my philosophy, what am I doing, things like that. Because I have sold dividend stocks. AT&T gets a cut, they're out. Altria I sold. I'm not going to rebuy them until something really changes my mind. So, I adapt and I reevaluate things. I mean, people do that. That's what I'm doing with Target. I don't like a few things with them. I'm going to go over that. And this dividend growth stock, I'm really happy for selling this Target. I only have 10 or 11 shares. And sure, I'll tax loss harvest about $70 or so. That's not a big deal because this dividend growth stock runs circles around it. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button. Let's check this dividend growth stock out right now. So Target's sitting at 123.69. They've been up 40.65% in the past 5 years. They're actually losing against the S&P now. Their dividend yield is 3.56%, a PE ratio of 16.97. Average volume 5.40 million. The market cap is 57.10 billion US dollars. The range is 120.75 to 181.70. Day range is 122.53 to 124.73, and its previous close was 124.46. So that's not the biggest thing that concerns me, the dip in price per share. I'll even go over their revenue trends and price to earnings. That's not what concerns me that much because there still could be a potential rebound. That's one thing that didn't irk me to have me pull the trigger on them. I'm going to go over a few more things. So here's some positives I see. Their increase in revenue. So this is annually in millions US dollars, 70,271, 2018, 72,714, 2019, 75,356, 2020, 78,112, 2021, 93,561, 2022, 106,005, and then 2023, 109,000. So there is an increase in revenue, which is nice. Okay, I like that. We're going to go over a few more things. The one thing that is a little bit that had me studying a little bit closer, I looked at their revenue trends, and their revenue for the quarter ending in July 31st, 2023 was $24.773 billion, a 4.85% decline year over year. These guys have had increases, and now they have a decline. Now I'm going to go over a few more things. Their gross profit in 2023 was $26.891 billion, a 13.7% decline in 2022. So their gross profit for the 12 months ending in July 31st, 2023 was $28.198 billion, a 0.31% decline year over year. That's one thing that is a little bit of a red flag that didn't get me too much yet. So I'm going to go over net income and earnings per share. So their net income in 2021 was $4.368 billion, a 33.13% increase in 2020. Their annual net income in 2022 was $6.946 billion, a 59.02% increase in 2021. This one had been looking and doing a little bit of digging. The target annual net income from 2023 was $2.78 billion, a 59.98% decline in 2022. And their net income for the 12 months ending in July 31st, 2023 was $3.73 billion, a 20.15% decline year over year. Their net income for the quarterly ending in July 31st, 2023 is $0.835 billion, a 356.28% increase year over year. Their net income was good. Okay, that's good. Okay, now earnings per share. So in 2021, their earnings per share was $8.64, which is a 35.85% increase from 2020. 2022, the earnings per share was $14.10, a 63.19% increase from 2021. Their annual earnings per share in 2023 was $5.98, a 57.59% decline from 2022. So there was the 12 months ending in July 31st, 2023 was $7.28, or 7.28, a 17.55% decline year over year. The earnings per share for the quarter in July 31st, 2023 was $1.80, a 361.54% increase year over year. Okay, that's good. I'm starting to see an increase. The decline for the 12 months is a problem, but there's a little bit of rebound. I saw some of their plans to kind of revamp themselves. That wasn't too bad, but this is what really had me pulling the trigger on them, and I'm going to go over that. The one thing that concerns me, in May, Target warned that theft and organized retail crime was hurting profitability and could reduce it by more than $500 million, on top of the $650 million losses it occurred in 2022. That is a lot of money, okay? But this is what really got me. I'm like, you got to be kidding me. And logistically and strategically, if you're going to make money, why would you go in these locations? We're going to go over their locations for their expansion plans. And I'm on their website, okay, their future store openings that they plan. Los Angeles, San Diego, San Fernando, South Lake Tahoe, and California, okay? There's a lot of theft in California. Now, Florida, I can understand being okay. Illinois, that's another one that kind of is not a good idea, as well as Michigan and St. Louis. I do not like their location. And also in New York, I've read way too many articles regarding theft, and they're going in New York and Philadelphia. Philadelphia has a lot of issues. So now Texas is not a bad move, but honestly, these locations are not very strategic for me. So I'm a little bit worried about theft. And that's one thing that really turned me off. I would give a company a benefit of the doubt right now, but this is a big problem. And as a company, when there's Costco, when there's Walmart, you guys are doing much better. So I didn't like the way things were looking. I'll even go over their dividend history. They have a pretty good dividend history in hiking their dividend. So I'm going to go over their trends. We're going to start in 2015 quarterly. 56 cents, 60 cents, 2017, 62 cents, 2018, 64 cents, 2019, 66 cents, 2020, 68 cents, 2021, a huge increase, 90 cents, 2022, 108, and then 110. Their payout ratio, according to Zacks, is 59%. Number of dividend increases in the last 5 years is 5. Dividend growth is 13.01%. So right there, you bought one share, so 110 times 4 would be 440. They have a 3.56% 0.56% dividend yield. All these things that are going on the earnings per share trends, they have a lot of issues. They have some debt. They're decreasing in price per share for a reason, and the theft is what bothers me the most. I can see these guys again. I want to give the benefit of the doubt, and these guys are hiking their dividend. It appears that their dividend might be safe, and they may hike their dividend. Long term wise, I don't know. I mean, Costco's a lot better. Just the problem is, with people protesting with this woke, I do think that is part of the problem. But this theft in these locations that they're at is not good. And that's going to hurt them in the long run, especially strategic locations. So I'm going to go over to the dividend stock that I bought since I sold and took a little bit of a hit. I'm going to show you the dividend stock I bought, and I'm really happy about that, which is Pepsi. And I would love for my TSLY dividend income to really load up on these guys. That would, I mean, that's one thing I plan on doing. Now it's time to pull the trigger on Target and buy Pepsi instead. And I told you I love Pepsi, and I need to get that. So as a joke, I own Coke and Pepsi. You can call me a Coke head and a Pepsi head. So there you go. Dividend yield is 2.87%. The PE ratio is 30.90. The average volume is 4.29 million. Market cap is 242.65 billion US dollars. The tier range is 160.98 to 196.88. Its day range is 175.61 to 177.15. Previous close is 176.40, and it has done very well against the S&P, which is very attractive. This is also IRA material, so you're getting some stability. But what I like about Pepsi is how many products they have also, and they bring to the table. I love this diagram. It makes life so much easier. So right here, look at what Pepsi owns. Okay, Quaker. I eat their oatmeal just about every day. They have Frito-Lays. They have Tropicana. They have Pepsi products. They have Gatorade. They have mugs, root beer. They got Mountain Dew. They got 7-Up. They got Ocean Spray. They have a lot that they bring to the table. And they always acquire more and more companies. So there's a lot of security with these guys. There's a lot of dividend safety with these guys. So this is what I really like about them. I mean, they just get bigger, they acquire more companies, and they adapt. And they're way better than Coca-Cola. I don't care what people say. They run circles around Coca-Cola. There's no way that Coca-Cola can keep up with them. And I own both, just to be honest with you. So let me go over their revenue and their earnings per share and their dividend history. It's really smooth. So that's what I like about them. They're smooth. Everything. I mean, they are probably one of the best dividend growth stocks out there. So revenue-wise, this is annually in millions US dollars. 2016, it was 62,000. 2017, 63,000. 2018, 64,000. 2019, 67,000. 2020, 70,000. 2021, 79,000. And 2022, 86,000. So they have an increase in revenue. And guess what? Target probably sells a lot of their products too. So that's one thing to think about. They're in gas stations. They're everywhere. Vending machines. Pepsi is big. And that's what I like about them. They are big. They're an international brand. Target is not doing very well internationally. These guys are. So I like the expansion. I like their acquisitions, which make them very strong. Let's go over a few more things. So Pepsi's net income for 2020 was $7.12 billion, a 2.65% decline in 2019. Big deal. I'll blame the pandemic. PepsiCo's annual net income in 2021 was $7.618 billion, a 6.99% increase in 2020. PepsiCo's annual net income for 2022 was $8.91 billion, a 16.96% increase from 2021. PepsiCo's net income for the 12 months ending in June 30th, 2023 was $7.900 billion, a 14.47% decline year over year. Then Pepsi Net's net income from the quarter ending in June 30th, 2023 was $2.748 billion, a 92.3% increase year over year. Try saying that very fast and 10 times fast. Or say that 10 times and say that really fast. See, I'm already tongue twisting trying to even say that. So let's go over earnings per share. Their earnings per share in 2020 was $5.12, a 1.54% decline from 2019. 2021, the annual earnings per share was $5.49, a 7.23% increase from 2020. PepsiCo's 2022 annual earnings per share was $6.42, a 16.94% increase in 2021. PepsiCo's earnings per share for the 12 months ending in June 30th, 2023 is $5.70, a 13.86% decline year over year, not concerned. Pepsi's earnings per share the quarter ending in June 30th, 2023 is $1.99, a 93.2% increase year over year. That's pretty good. Now I'm going to go over their dividend history. So right here, I'm going to start in 2009. They were 45 cents, 2010 48 cents, 2011 52 cents, 2012 54 cents, 2013 57 cents, 2014 66 cents, 2015 70 cents, 2016 75 cents, 2017 81 cents, 2018 93 cents, 2019 96 cents, 2020 102, 2021 108, 115, and they just cracked 127. So according to Zacks, their payout ratio is 70%. I'm not concerned, really. They have a lot of security with them. They're pandemic proof. They're recession proof. Dividend growth in 5 years is 6.05%. The number of dividend increases the last 5 years is 5. Dividend yield is 2.87%. So they are a little bit pricier. And I'm actually going to calculate real quick. 127 times 4, you get 508 if you bought one share. So that's the difference with Pepsi. I feel very good about my decision. I think that Pepsi is long-term wise probably a better dividend stock than Target. That's just my philosophy. I really had to look into it. I don't like those locations of Target. That was it. I can't believe, they're so concerned about this, but they get in those locations. I think that's a stupid move. Now, they already made some issues with debt and all that. A lot of people are dumping them. So something's going on there with those guys, and they got a lot of problems they got to work on. So this is why I did it. Like I said, something drastically has to change my mind to sell these dividend stocks. I finally have time to look and reevaluate them a little bit more, and I'm like, okay, what do I need for the long term, and what would be really good for these dividend growth stocks or these high yield dividend stocks to buy that will have really good dividend growth, good revenue, and are really in demand. So if you don't like Target, you can go to Walmart, go to other places. So that's one thing that crossed my mind. Okay, these people are protesting too. And I don't care what people say, and you can say I'm wrong, but I do believe that, them getting political, like Anheuser-Busch and Disney, is really hurting them, to be honest. That's a big problem. But I also think that the way they're handling things is a problem. And going in the state of California with a lot of your stores in New York is really a stupid decision, because I have a feeling that theft is going to be a lot higher. They're very laid back with security over there, and that's going to be a problem. And you're already seeing videos of people coming in, robbing California stores, York stores, and such, and it's getting worse and worse. I'm anticipating it to get worse. California is a dumpster fire, and New York is a dumpster fire. My honest opinion, again, I'm not giving any financial advice, that is a terrible idea to live in that state, especially if you want to retire on dividends. In New York or California, taxes are off the chain. You got to worry about violence and theft. I would not feel safe living in that state. So that's basically why I sold Target for Pepsi. So let me know what you think of my decision. I feel really good about it. And of course, I will jump to my disclaimer, but I really wanted to address this. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Hope you guys enjoyed this and smash that like button, hit the notification bell. Why don't you post in the comment section about Target and my decision selling Target over Pepsi and taking probably a $70 hit to buy Pepsi stock. And of course, I'm throwing in 500. I'm buying some TSLY and I'm buying a lot of shares into other stuff. You guys take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. This YouTube channel does not offer any financial advice or any form of financial advice. This is for entertainment purposes only. You are looking to seek advice from a financial advisor. That's the best way to do it. They are certified to do that, or somebody certified to give financial advice. I am not giving financial advice. Like I said before in my previous videos, something drastically happens, I will sell stock. So, I will tell you usually that I'm long in stocks unless something drastically happens or something changes my mind. I do not believe in pumping. I'm not pumping any form of stocks. These are my decisions. This is my dividend investing journey. Investing, you can take a loss. I did take a little bit of a loss with Target. And you can get a lot of money or gain a lot of money. You can lose a lot of money. So there's always a risk in investing. So again, do not take this in any form of financial advice. You take care and have a good Monday.